Welcome, fellow dummies. Today we're going to talk about swing trading, a type of trading strategy that can help you make more money in the stock market. But what exactly is swing trading, and why should you care? Well, if you're tired of watching your investment stagnate or lose value, swing trading might be just what you need. By taking advantage of short-term price movements in stocks, swing traders can potentially earn higher returns than buy and hold investors. And the best part? You don't need to be a financial genius to do it. Swing trading is a popular trading strategy that involves holding positions for a few days to a few weeks, with the aim of capturing short-term price movements in the market. Unlike day trading, which involves buying and selling stocks within the same trading day, swing traders hold their positions for longer periods of time to take advantage of trends and patterns in the market. This makes it a more flexible and less stressful approach to trading, as it allows traders to take advantage of opportunities without having to constantly monitor the market. One of the key differences between swing trading and other trading strategies is the focus on technical analysis. Swing traders use charts and indicators to identify trends and patterns in the market, and make decisions based on this data. By contrast, fundamental analysis looks at the underlying financial health of a company to determine its value, and position trading involves holding positions for much longer periods of time, sometimes for years. While swing trading can be more volatile than other strategies, it also offers the potential for higher returns in a shorter period of time. One of the biggest benefits of swing trading is its potential for higher returns compared to other trading strategies. By holding positions for a few days to a few weeks, swing traders can take advantage of short-term market movements and capture profits that may not be possible with longer-term investments. Another advantage of swing trading is that it typically involves lower risk than other types of trading. Because swing traders are not holding positions for extended periods of time, they are less exposed to market volatility and unexpected events that can cause significant losses. Additionally, swing traders often use stop-loss orders to limit their downside risk and protect their capital. To choose stocks for swing trading, look for those with high liquidity and volatility. Liquidity ensures that you can enter and exit the trade easily, while volatility provides opportunities for profits. Setting stop-loss orders is crucial in managing risk. This means that you set a predetermined price at which you will sell the stock to minimize losses if it moves against you. One of the biggest mistakes that beginners make when swing trading is chasing trends. This means buying a stock just because it's been going up recently, without doing proper research on the company or its financials. While this strategy can sometimes pay off, it's often a recipe for disaster. Stocks that have already gone up significantly are often overvalued, and there's a good chance that they'll come crashing down eventually. Another mistake that beginners make is failing to diversify their portfolio. This means putting all their eggs in one basket, so to speak, by investing too heavily in one particular stock or sector. While this can lead to big gains if things go well, it also means that you're taking on a lot of risk. If that one stock or sector takes a hit, your entire portfolio could suffer. It's important to spread your investments across different stocks and sectors to minimize risk. In conclusion, swing trading can be a great way for dummies to enter the world of trading. By taking advantage of short-term price movements, swing trading offers lower risk and higher potential returns compared to other strategies. However, it's important to remember to choose stocks wisely, set stop-loss orders, and manage risk. Avoid common mistakes such as chasing trends and failing to diversify your portfolio. With these tips in mind, you can start swing trading with confidence and take control of your financial future. Thanks for watching. Like and subscribe, and we will catch you on the next one.